A warm welcome to you there. Well, the Assets Management Corporation of Nigeria has said it will reposition Arik Air to become a trailblazer in the country's aviation industry. Managing Director Amcon Ahmed Kuru says aviation was not just a critical sector, but also a strategic and core component of any economy that wished to compete on the global scene. The corporation took over the management of aero contractors in 2016 after it dissolved the board of the airline and did the same for Arik last year, following a debt burden that threatened to ground the carrier. African Development Bank has projected that contraction in Nigeria's economy will drop to 0.6% in 2018 and 0.1% in 2019. AFDB said in the 2018 African Economic Outlook report that the sub-Saharan African economy would experience an improved growth of more than 4% in 2018. The report stated that per capita income in sub-Saharan Africa, which rose by about 1.1% in 2017, would increase by more than 1.5% in 2018 and a further 1.8% in 2019. The report said the chance for Nigeria's economy to grow in 2018 depended on the faithful implementation of the Economic Recovery and Growth Plan by the federal government. Well, banks in Nigeria and across the world are expected to shift priorities towards growth, digitalization and innovation as top priorities in 2018. This will enable them to remain in business and make remarkable profit. According to the 2018 report conducted by Ernst & Young, a global 85% of banks cite implementation of digital transformation program as a business priority for 2018. The rating agency added that investment in technology to drive efficiency, manage evolving risk, and benefit from growth opportunities is seen by banks as critical for sustainable success. The survey of senior executives showed that banks are seeking to become digitally mature, completing the transition from regulatory-driven transformation to innovation-led change in order to insulate themselves from future downturns. Now, the oil price shock, which started in mid-2014, severely affected the Nigerian economy. Now, in 2015, the economy slowed sharply as annual real GDP growth declined to 2.7% year-on-year from 6.2%. By 2016, the economy recorded its first recession since 1999, recording a growth of minus 1.5% year-on-year as oil production shortages affected the decline in the oil price. While the underperformance in the oil sector spilled over to the non-oil sector through the exchange rate channel, with the non-oil sector contracting 0.2% to record its worst performance since 1985. By Q2 2017, the Nigerian economy exited recession, recording a positive growth rate of 0.5%. The recovery due to a sharp recovery in the oil sector, driven by an improvement in oil prices and production volumes. The non-oil sector recorded positive growth for the second consecutive quarter, prompted by ongoing recovery in the manufacturing sector due to improved foreign exchange liquidity. Aside the improvement in the real GDP, the performance across several other macro indicators suggests that the economy is on track for a broad-based recovery. Local and international agencies have projected that the Nigerian economy will grow by a different percentage that's in 2018. According to the World Bank in its economic outlook, the country would grow by 2.5%, rating agencies Fitch forecast 2.6%, IMF 1.9%. The Lagos Chamber of Commerce and Industry has set 3% growth for Nigeria this year. Well, indeed, to look at this and put this into perspective, I have it with me in the studio, Chief Economist with PricewaterhouseCoopers, Andrew Nevin. Glad to have you on the show.
Always happy to be here, Tolo.
Yeah, no one. I must tell you Happy New Year, well.
It is Happy New Year. A better year this year.
Yeah, well, better year. Yeah, your first word for 2018. What are your expectations?
Well, if we go by the GDP numbers that we just talked about, I mean, we're thinking 2 or 3%. Things are definitely getting better.
Oh, great. 2.3%, 2 or 3%. But there have been lots of figures we've seen. World Bank has been out, LCCI has been out. What are the fundamentals responsible for this beautiful figures we see?
Well, I mean, the truth is we want to diversify away from being an oil economy, but we haven't done it enough, right? So oil's come up, production's come up, oil's almost hit $70. It's giving us some breathing room this year, some more liquidity coming into the markets and into the fiscal coffers for the government. So that's giving us a cushion, but we need to take advantage of it to continue with our diversification drive. If we fail to take advantage and oil goes again to $30, 2019, 2020, we are going to be back in exactly the same place. So this brief reprieve with the high oil prices and with the good production is something that we really need to make sure that we capitalize on.
We really need to capitalize on that. There's also been improvements in our stock market. There was a report this week that we're doing very well among about 96 stock markets, 12% surge in terms of dollars. What is also responsible for this giant stride?
Well, I mean, we had those difficult years. People always knew that Nigeria had great potential. We have a better exchange rate situation with the investor window that's there, the stability in that, so people feel confident. So it's fantastic. But at the same time, I think the big issue for 2018 is, can we create more things to invest in? Because the existing stock indices, the existing stocks have gone up a lot, whether the banks, a few of the industrials we have, but there aren't enough of them, and people aren't going to keep putting in money to drive the same stock higher. What we need are some people to come to market with the IBOs, some new capital that comes into that. So really look for 2018 to have some of these IPOs come out and expand the base of the stock market to keep the global interest in Nigeria up.
Growth is beautiful. It's good to know that there's growth in any economy, just like Nigeria, and what we project and what we expect to achieve. But something is called inclusive growth, all-inclusive growth, that everybody will be carried along. There'll be foods on the table of Nigerians. People can eat, people can do what they want to do, purchasing power will be on the high side. How do we achieve an all-inclusive growth at this time?
I think, Tolo, that's a critical point. I mean, so we're sitting here, we've got almost 30%. If we take unemployment and underemployment together, we have almost 30% in those two categories. So that's a massive number of people. And of course, our population is growing, so the number of people, we need to produce 4 million jobs a year. I mean, I think, our thinking on this at PwC has always been we need to drive productivity. So we have a lot of low-skill, low-wage people employed throughout our economy. If we can provide more skills, wages are going to go up. I mean, it doesn't matter whether you're Canada, my country, China, Singapore, South Africa, wages go up when productivity grows up. So we think to drive inclusive growth, probably the most important thing that we can do is really focus on vocational training. Because if you think about how the economy works, we don't necessarily need a lot more, certainly don't need a lot more PhDs in economics, but what we need are people that have skills in auto mechanics, skills in masonry, electrician, catering, those sorts of things, and they're better and better at them, so that it just drives the total output up. So we would really like to see the state and federal government focus a lot on vocational training in the next few years.
But that's going to be like a shift, and because going about that shift or achieving that shift, I think a lot of infrastructure too needs to be put in place, because we've not actually focused more on vocation for a long time, skills acquisition. So it's going to be another drive entirely. I think there needs to also be investment in infrastructure along that angle.
Well, we know there needs to be investment in infrastructure. I mean, that is a given. I think we understand that the roads probably have to be done by the public sector, but a lot of the other big infrastructure, private money is prepared to come in terms of ports, airports, seaports, free zones. So it's all there, and the private sector is willing to come. But it sort of highlights again, though, we need to stay focused on the ease of doing business issues. So for us, the biggest risk is oil price goes up and people lose their focus on the fundamentals, right? We've made a lot of progress on ease of doing business. I can tell you from where PwC sits, we see immense interest by investors, both foreign, international investors and domestic investors. They want to do things. They want to build businesses, not oil businesses. They want to build businesses in agriculture, in manufacturing, small-scale power, hospitality, tourism. But when we make it harder and harder, they lose their energy for it. So we moved from 169th to 145th on the ease of doing business. We absolutely need to keep that momentum up. It comes from the federal level and the PEBIC, the Minister Emila and Dr. Jamoke driving that. Also comes at the state level where His Excellency, the governor here, is driving very hard. But with oil price going up, the danger is always people just lose the focus on it. But we cannot afford to do that.
Indeed, we can afford to do that at this time. When we look at this, I just nearly skipped my mind. The big giant, that's inflation. That's another thing that really threatens every economy. And there's been projections also that maybe by mid this year, Nigeria could get to single-digit figures. You know, the central bank actually came out to say that. But with this pace and with the issues with the energy market, I think the food inflation now is kind of on a decline. That's even on the positive side. But with the energy crisis and all of that, do you see it affecting inflation one way or the other?
Well, I think we're going to have a modest decline in inflation. Well, modest, I mean 15% now, perhaps down to 10 to 11%. I mean, the governor of the central bank said single digit. That would be fantastic. We're not going to get any lower than that, just the structure of our economy. But I mean, the macroeconomic conditions for inflation are positive. Obviously, if we continue to produce more food, it's going to take pressure off importing food and take pressure off prices here. And that's, of course, the most important price for the bulk of the population. So I think the conditions are good for that.
Let's look critically into the ease of doing business thing now, because there's been lots of development here, and many are saying that, well, we can now come in, visa on arrival, at the ports and all of that, clearing made easier, you know, and all of that. But some people still say they face some challenges.
Well, I think what's happening with this is that, as I said, the people like the minister, the governor, His Excellency here, at that level, they're very committed to this, and they drive. But to drive it all the way through the organization takes time. I mean, because if you imagine you're running a hotel with a restaurant, when someone comes to visit from the relevant commissions, you want to know they're going to deal with you honestly. The regulations are applied evenly. There aren't extra fees being demanded from you, and it has not yet driven all the way through that level. But the other issue that we're talking a lot about is, in a way, we think that the single biggest economic issue is the land registry. Because if you think about it for a minute, real estate is 50% of all the assets in the world. Everyone needs a place to live. Even in the internet era, every business needs a place to operate on. So real estate has to work, and it's been a lagging sector. Why is it a lagging sector? Well, because if you don't know who has land, if you don't know you have land title, you're not going to invest in your land, improve it, buildings, capital spending. If the bank doesn't know who owns it, they're not going to put a mortgage on it, and who can buy a property in cash? And if the securities market doesn't know who owns it, they're not going to be able to securitize it to raise capital. So that sector, to get moving, really needs a proper land registry. So one thing we're advocating, of course, it's a state issue, is every governor should be very focused on that. And of course, the other advantage from the governor's viewpoint for the state is once you know who owns the land, then you can tax it. So in terms of your IGR program, a land tax is much more efficient than income tax or consumption tax.
Now there's some laws that many have also argued that needs to be passed into law, some bills that need to be passed into law, so that it could also enable us achieve this same in the ease of doing business. You know, that's part of us, what has to do with the voluntary taxes and all of that. The tax issues generally, are we really taking advantage? I think there was supposed to be a national tax policy, which has been reviewed by a committee. I don't know if they come out with their report. We've not heard anything. How getting people into the tax net, making them really understand that government is doing well. Like you always say, Lagos, for example, people are ready to pay taxes, see what the governor is doing. What about at the federal level? What's your assessment?
Well, I think that the real focus only started sort of 18 months ago on this. I think there is a commitment to do it. Again, our hope is that with the oil price increase, there isn't a backsliding, because in the long run, medium term, 2 years, next year, we can't rely on the oil. We need to have a proper tax system. We all know, we've talked about it before, and it's in the press, how woeful our tax collection is. So let's take advantage of the higher oil prices to clear some arrears. People need to get paid in states. Let's use it to make sure the capital projects get started. Let's use it reduces our borrowing a little bit, so it takes pressure off interest rates. But don't take the higher oil price as an excuse to not keep driving the other kind of taxes on that. And of course, the other truth about the taxes is when you tax people, they demand service. So in Lagos, we have quite a sophisticated system for collecting taxes, but the citizens also demand things from Lagos State as a result of that, and we need that across the country.
And the government is trying as much as possible to meet up with their demands. Well, as we move on, we need to build SMEs, small and medium scale enterprises, because they are the engine room of every economy. And this government has talked about even the economic growth and recovery plan, which we are also supposed to talk about, a document that's supposed to help reshape, and reactivate, reject this economy. What do you think about this beautiful document, and how can we actually encourage SMEs in this country?
Well, I think the ERGP, it's a great document, but there's so many things in it. It's just too many. In some ways, I think our view is that people may overestimate how important SMEs are. Why do SMEs create most of the jobs in this country? They create most of the jobs because we don't have enough big champions. If we have a company like Dangote doing rice on a major scale, that's what we need, because of course then the SMEs grow around it to service it in many, many ways. So we would like to see more kind of national champions, big companies emerge, structured employment. So people, why are there so many people in the informal sector? They don't want to be in the informal sector. They want formal employment, proper terms of payment and the way they're compensated, pension plan paid into their PFA. That's what they want. But the way to get that going is to get the big companies national champions. So oftentimes I'll hear Nigerians say, well, look at South Korea, how well they've done versus us over the last 50 years. But if you actually look at the structure of the South Korean economy, it's really driven by these big companies. And of course, there's all the SMEs around them, but you look at Samsung, Hyundai, Kia, Lotte, they are fantastic companies, really supported by Koreans. So we need more of those sort of national champions. Obviously, Mr. Dangote is the leader of that, but we have other ones that are doing it, some in oil and gas, some of them in agricultural food processing, some of them in manufacturing. And to the extent that they're successful, they'll drive their own employment, but they'll also drive SMEs that are able to service them. And that will be a big improvement to productivity, big improvement to bringing people into the tax net, getting them out of the informal sector.
Trickles down to the masses. Now, as we round up this segment of the show, foreign direct investment, and many have come to say that we have lots of portfolio businessmen coming into Nigeria, that they only come, tap into our stock market, tap into the economy, and after some time they want to move away. What policies do we really need to hold on to happen this new year, so that we can really get it right, so that we can have investors that will stay and do business here in Nigeria?
Well, our view has always been that we want both kinds of investors. We need portfolio investors. Not everyone is a direct investor. You need portfolio investors. They drive our interest rates down. They've driven our stock market higher, and they're critical to us. And you worry they go in and out, but the way to keep them in the economy is for the economy to continue to do well and have confidence. They don't need to pull it out. They'll leave their money in Nigeria. So, and that has doubled between 2016 and 2017. I think foreign portfolio investment has doubled. Foreign direct investment went down. Now, why is it going down? It's a lagging indicator because it takes a lot of time. It takes 1-2 years to make a big investment. So when our economy was weak, no one was looking to make it. So all the way through 2017, it went down. But we know from our clients at PwC, lots of people are looking at things, a big investment, tens of millions of dollars, in some cases hundreds of millions of dollars. But what, again, they need is that business environment. That means the land issue. They know where the land issue is. They know what their taxes are. They know that the fees they pay are transparent, easy to do. They want one office to go to be able to sort out their business issues. I mean, they know there are challenges everywhere, but the easier we make it for them to grow their businesses, the faster we're going to to get the foreign direct investment. But the biggest danger to us is if we reverse. So now we've gained confidence of the portfolio investor global. You know, people have confidence in us. Direct investors are looking very carefully and their plans are coming along. The worst thing for us is if we start to reverse the reforms, then we're going to have a catastrophe, because they're just going to pull out for another 5 to 7 years and say we were kind of burned in 2014, 2015, stood back, economy came back, we were ready to come in again, and then we were sort of burned again, and it'll be a long time before they come back, and we cannot afford that.
Indeed, I must appreciate you. Chief Economist with PricewaterhouseCoopers, Andrew Nevin, giving insight, projections, economic issues, and how we move ahead for 2018. Well, everybody seems to be optimistic, and I want to follow that too. I believe that 2018 will be a good year for this country.
No, we're optimistic. If we take advantage of what we have, we're going to have a great 2018, a great 2019, a great 2020.
Thank you very much for your time.
Thank you.
Yeah. Well, we're going to take a break, and immediately we come back, we'll move straight to the stock market, where business editor Effiong Ekop is standing by. Stay with us. Glad to have you back. Now let's move straight to the stock market, where TVC News business editor Effiong Ekop is standing by. Ekop. Ekop, it's all yours.
Let's record. I can't hear them.
Well, I think we're having challenges there getting Effiong Ekop. I think something to do with the audio and all of that. Well, we'll still try to reconnect before we round up the show. Well, crude oil price stays low as the price of Brent stands at $69, and the Brent crude stands at $69, while oil Brent stays at $67 per barrel. Well, it's on that note that we would actually round up today's show. I must thank you very much for watching. We do apologize for the challenges there, not being able to get feeds from the Nigerian stock market. Well, join us again tomorrow for a fresh edition. We'll bring you up to speed with latest news in the world of business and also figures from the Nigerian Stock Exchange. Thank you very much for watching. I am Tolu Lokpe Ogunjobi.